Hello, hello. Welcome to the Crypto Kingdom. This is London. Wanted to say hello and hope you guys are having a good conclusion to your week. What an exciting day. We have a lot going on with Harmony One, and Dogecoin has roared up. It is up 86% today. It will not chill out. Let me turn this music down. This is Pump It Up. I don't know if you guys have heard this. There we go. We'll turn this down. Okay. Let's get to business. Okay. That song is called Pump It Up. I do have the copyright available for that, so don't worry about that. It's by Savoy. Today's special edition, we cover technical analysis. That is what we do. We establish pricing targets. That is our specialty. Today we're going to be talking about essentially what's going on with Dogecoin. It is up, I will say, it has been up about 100%. And whether or not that was anticipated, we will be discussing that 100% and kind of the other coins, particularly Harmony One, and essentially what we are looking at with Harmony One, kind of our outlook and why we still feel very comfortable being in Harmony One. The notion of kind of what we are based around is kind of a logical, as you guys have listened. It is and let me remind you real quickly, go ahead and make sure that you join our Twitter. We provide pricing targets, we provide updates, we provide a lot of different things on what we believe to be secure investments. And I will bring up the security notion. We spend a lot of time trying to hedge against any potential risk. Okay, we spend a lot of detailed time trying to make sure that, at least I do, on that my investments are secure, that there is a real technology, that there is a real fundamental behind it. Now, there is a lot of fun to be had. I'll say that. There's a lot of fun in the marketplace to be had. There's nothing wrong with that. And as people can get excited about a coin and get excited about different things, hey, it's a free marketplace. And I'm glad that we live in a place where we can all invest in what we want to. As we look at the Doge chart, we will look at the Harmony One in 1 second. I want to update you because some of you may hold Doge. Some of you may have gotten in early on Doge and may want to see kind of a retracement. We specialize in Fibonacci's, in technical analysis. I'm a former financial analyst, have a big background doing big deals and working with people or against people, and for and with people like Harvard, endowment, and some different good guys like that. So my work has been good enough for them. I hope it's good enough for you. And if you do think it's the type of work you'd like to see, go ahead and give us a thumbs up. I would appreciate that very much. Let's take a quick look at kind of the pricing action today for Doge, because this is an uncanny day. Okay, this is kind of a hallmark day for Dogecoin. So let's spend the day, or not the whole day, but a minute looking at the day. And I'll tell you, it's not my favorite at all. It has not been. And to say that it's on the map of a major acquisition, it's not my favorite. But I cannot ignore the price action. So what I can do is talk about the fact it has gone up from 6 cents on into, it looks like, about 29 cents. So that is a phenomenal gain. That's something to be excited about. Congratulations to all the people who have made great gains. I mean that's just phenomenal, guys. You've more than kind of doubled, tripled your money. You're doing great. What I do like is I prefer right now. I prefer Harmony One. The reason I prefer it is because it has gotten 20 times. It's gotten 20 times its returns, and we have been able to multiply our own returns by multiples more than that, even amidst the consolidation. So let's compare the two. I think it's a good comparison, and if you guys are willing to stomach the argument here, I would challenge you to listen, okay? Because I promise you'll learn something. And for those of you who may be turned off immediately, I promise you'll learn something. We are very intelligent on this channel. We have called out the previous pricing targets on, an immediate 30% gain, an immediate 20%, 30%. I mean, we have guys that are cooking on 2x their money amidst a consolidation and a kind of a retracement and a consolidation. So we are very precise, and we discuss those precise targets where people are doubling their money. I mean, hey, Dogecoin, and we'll go over it more. You've doubled your money today. That's fantastic. That's run of the mill for us. Okay, that's what we like to do every 5 days. So you guys get a good day where you do that. That's fantastic. We like to do that about every 5 days. You guys can join us on Twitter if you'd like to. And I almost forgot, we do have a big giveaway. First of all, on Twitter, to get there, we're going to give away 2,000 Harmony One coins. You guys can look that up. It's got a great story. You guys who are returning loyal subscribers, you know that. It's a great story, and we just have a good community. So we welcome everybody into the community. To go into Twitter, you can just type in the kingdom. This is the crypto kingdom, and type in the kingdom. You'll have to scroll to the bottom and click on go to the kingdom. Okay, you'll have to scroll to the bottom of that search menu. Click on that. You'll see us. Go ahead and click on follow. And if you'll do that, we will plug you into the giveaway. We will make sure you know about updated information as it pertains to Harmony One. We don't really cover Doge, so that's just not something that we do cover. It is something, Doge is something that's having a phenomenal day, so I can't ignore. Who's going to ignore 84% to the upside? It is in a category of risk right now, which makes it difficult, and I think there's probably some fear in the marketplace, and one of my friends told me that this evening. There's probably some fear in the marketplace, both from individuals who are holding an asset like that. It may compare very well to individuals who may be holding Harmony One. It may be a dynamic that we need to discuss, because as something begins to potentially retrace, okay, and now Dogecoin this evening has experienced that to the tune of, if we were to look at this top level, it may vary depending upon which interval of the pricing action we actually decide to look at. But for instance, as people get in to Dogecoin, understand they will be getting in and they will be experiencing a potential. A lot of people are getting in right now. There's huge volume indicators. And so people may be getting in at the wrong time. We focus on timing. Okay, that's what we focus on. And the skills that you'll learn by listening to this channel, I promise you, the skills you learn listening to this channel will assist you greatly as you look at potentially getting into a rapidly rising financial concern or an asset like Dogecoin today, 82% on the upside. We have been there. Okay, we have been there, just like what Dogecoin is going through right now. We have had that escalation. We have had the massive increases in price action. We've been there. Okay, one of our rules that we look at, and I'll just tell you, one of our rules is, we turn this into a real kind of easy puzzle to figure out. We don't buy anything with a tail on it, and it's just real simple. I try and break things down so it's not complicated. But if this here looks like something like let me move the Fibonacci timing sequences over so you can see this. This is a pricing action. This is something to give you a good idea of how not to lose money in the market. It applies to anything you're looking at investing in. I promise, guys. I promise. Now this, I like to think of this essentially as kind of like, let's move this horizontal line down. This here, it represents a price action. Now I'm not talking about poorly about Harmony One at all, to the contrary, or Doge at all, to the contrary. What you see here is this line here, this arrow. I like to think of this kind of like a dog. Okay, it's real simple, and stick with me for a second. I like to think of this kind of like a dog. The arrow is the front of the dog. Whenever you see pricing action like this, and it has a tail on it, okay, whatever you see and it has a tail on it, we don't buy anything with a tail on it, okay? And I'll just discuss, we do not buy anything with a tail on it. You say, well, if something's going up, you're never going to get into anything. Well, the caveat is, at some point, we're going to get into something that starts to have a retracement on it. And we'll apply this over to the Dogecoin chart just so you guys who are in here and have a holding on that so you can look at it. But at some point, we're going to get into something that has a retracement. Now, the Fibonacci tool is something we are very proficient in. It allows us to deliver pricing targets, very particular pricing targets. And let's go ahead and move this up to about the proper level right there. We line it up with the previous price action horizontally, and we draw it to the top of the pricing action here within each interval. So as we look into this, if we were to acquire, let's say, and we were excited about getting into Harmony One, if we were excited about that, we would say, okay, it's on the upside, or let's say Dogecoin, it's on the upside, it's moving up, there's rapid price escalation, we don't want to miss it. How do we make sure we get involved? Well, first of all, at the top levels, okay, and at the top levels, I mean looking at the aggregate, okay, at the aggregate of this will normally draw another, and please pay attention to the strategy. It will help you. Our goal is to minimize risk and maximize gain, okay? So this may not be something you listen to all the time. And it's not financial advice. Go get your own financial advice. But for educational purposes, I've been through a lot of fancy schooling, Ivy Leagues, etc. So as we look at the overall Fibonacci, let's say at this level, at the higher level, okay, we have a very limited amount of money, if any, in the red zone. That's typically the approach that we take, okay, to help mitigate the risk. This can kind of be a planning guide or something, at least for you to bounce off a different idea or your own considerations in terms of how do you acquire something that's skyrocketing and going through the roof. You don't want to miss out on it. We know that. This allows you to get involved at kind of a light level. At this first green level, we say, well, we're just going to pepper in a little bit of money. And nothing serious. I'm talking nothing serious, okay? Just normally like $100, and it maybe it's $1,000 for you. If you've got 10,000 or 100,000 up here, you may have 1,000,000 at kind of the lower level. And as these drop with every single level, we compound down or we double or triple down. It's called a heavyweight double or triple down approach. Okay, what that does is that guarantees, and I'll say, look, you will pick up this at a specific point and in around here. You may pick it up at the lower level. But looking at the macro like this, it gives you an idea of how much overall potentially you could retrace. And that's what you need to consider when you're chasing something. They always say if you're chasing the train that's left the building, you might land on the tracks. Okay, we don't want you to land on the tracks. But in terms of missing something altogether, there's nothing wrong, even when you experience a little bit of a retracement, to maybe pepper in a little bit of money. And we start to look at, instead of the macro, and that macro dynamic gives us, I'll tell you, if you want to be profitable in what you're investing in, be prepared. No matter where you're at in the investment concern, be prepared. As the price were to drop, be prepared to increase your position. Be prepared to double or triple down. As you go down every level, doubling or tripling down will cover you, okay, in terms of potential losses. Okay, it will allow you to acquire, okay, essentially more coins. In this instance, it would be more coins at a cheaper price. So that would lower your cost basis. So essentially, on something like this, we would draw a Fibonacci and say, okay, this is radically wonderful, out of control. It's got a great pricing dynamic. We love it. We want to get involved. Well, we get involved, about the same. We would pepper in up top in the first green level. In the red zone, we don't have any cash available. We're not going to put any cash into something at the very top. I don't care what the chart looks like. We're going to get a good price. This is how you acquire something at a good price. At this top green level, we might put an order in. We might figure this up real quickly, and on the right-hand side, it's going to give us, and this is a good example. We'll flip back to Doge, and we'll apply it to one example so you guys can, essentially it's the same thing as I'm looking, I don't want to confuse anyone. I'm not sure who's here for Doge or who's here for Harmony One. I do know that Harmony One is kind of the mainstay of the channel, and that's we are very pleased. I almost say blessed. To kind of be able to share the space with Harmony One. So that's kind of our crew. That's what we do day in and day out, and you guys know that. So we're very blessed to have you guys here. We appreciate that very much. Thank you for being here. But I do want to cover kind of the market dynamics of what's, we haven't really covered how to buy in a kind of aggressive market. So what we would do is quickly we'd draw the Fibonacci's. We would make the calculations based upon the recent high. We would look at the first green level and say, well, we'll pepper in just a little bit in here. We'd probably put in some limit orders, type those up real quickly based upon the calculations that we would take over to the right. We would say, well, the first level is 16.5. Okay, put my limit orders in at a very light, just peppering in a little bit of money. As it goes down and retraces more, well, we're going to type in, put another limit order in at 15.7. That's this next line down, 15.7. All right, and we're probably going to double the amount that we put in. We're going to put in another limit order, believe it or not, and we're going to double down or triple down onto this level. We're going to go over real quickly, and it's going to take us about 2 minutes. We're going to type in, what is that, about 15 flat, about 14.9, yeah, 14.97. We're going to put in some orders right there. Okay, we go in again on the lower level. Now, what this does, not all of those are going to execute. Okay, not all of those are going to get filled by the market maker. But what that does in an uptrend, it allows you to accumulate on a reasonable basis. If it does take off to the upside, you're still involved at a small level, okay? But you haven't over leveraged your position to the point where, we had to get in. We didn't care if we got in at the top. No, 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 no. It's always better to lightly pepper in if you're ever buying in to anything like that, and to never compromise your overall position. Always be prepared. Okay, and people will say a stop loss. You can get put out by stop losses. You can do enough of them over time, and I just tell you these. I'll show you on the other charts why you can literally get wrecked. You wind up getting wrecked that way. But if that's your mo, that's fine. This is an acquisition strategy. Okay, to lower your cost basis. Okay, it increases your chances of profitability on something that's kind of feels like a runaway train if you're not involved in. What do they call that? You guys can maybe tell me in the chat. What is that? The FOMO, fear of what is that? Fear of something. I don't know. Missed opportunity. That's what it's called. Fear of missed opportunity. So as we look at this, that's how we would accumulate on the way up. You say, okay, that works for that one, but what about this one? Well, if we're looking at an acquisition, and we may apply this over to the Dogecoin, just so you guys can look at it. If we look at this level, look, it's still going to match up perfectly. Look how great this section is here. You see how it bounces right back down into, we probably raise this up a little bit, to tell you the truth. We may even raise it up to here, to tell you the truth. We may even get to the point where, and I'll tell you guys, you get to the point where we're flush with this across, and you guys who don't know Fibonacci as well, you may want to look at this, where we're flush all the way across with the preceding level, with the preceding step. Okay? Until we break through that, we're probably going to calculate based on that. Okay? And it could retrace all the way through here. So you guys can make that determination on how aggressive you want to be. If you want to be more aggressive, you would raise it higher. You would filter into here. If you want to be more reasonable and less aggressive, you can go ahead and do it here. It probably depends on what your previous channel looks like. Those are two options for you to consider. I can give you my take on what I would typically do. If you'd like to join us maybe in the Discord, we have the Discord server where we're giving away 2,000. It's 2,000 Harmony One coins. So as we look at the incredible investment that Harmony One has represented, understand this community has been through a 20x, okay, already this year. We are maintaining very well, I'd say very well on the charts right now. And we'll compare that to Dogecoin. Might as well. It's finally, we have something nice to compare our charts to. So there's nothing wrong with that. I think that's a great thing. I think everyone should be excited about that. And congratulations to everybody making money. I know some of you are making money, so that's phenomenal. We have let's see what we have. Why don't we go ahead and touch on this briefly, because it does look like, and I'll tell you guys, if you have a stomach for it, if you have a stomach for it, go ahead on with it. All right, because since we've started, and this is why I talk about if you have a stomach for it, if you want to go ahead, and invest like this, okay? Now, did I today? No, I did not. No, okay? Like I said in the beginning, okay, the beginning of the feed here, that I try and base things on risk, okay? This looks risky to me, right? This has a tail on it. It's real simple. It's got a big tail on it, right? They may be cranking a bunch of cash into it. I think it's kind of an institutional concern right now for a lot of people like Elon Musk and Tesla. And that's their game. That's what they want to play right now in the crypto market. It's not necessarily my game. That doesn't mean it's necessarily wrong or that I like it or don't like it. There's some features of it that don't fit my investment profile demands. So the ones that do, I guess the features that do fit my profile demands, and I'll probably switch this real quickly so you guys can see this on a line chart. I would prefer to do this on a line chart, and that's better that we're doing this on a line chart. It's not as gruesome of a picture there, because on the candles, it does look like, and you guys pay attention to this for an acquisition purpose, because here, if you wanted to acquire, I'll tell you, because everyone would want to get in up top, right? This is the circumstance that everything is going through the roof. It's up 100%. Everyone wants to buy in. I'll show you how the market maker gets you, okay, how he makes his money. And this is going to be a great tape to refer back to, because it's been a runaway train to the upside. It's been a rocket launch. It's been up 100%. And it's just been phenomenal, right? The whole day has been just absolutely a money maker, right? Now, it's got, the high was, let's see, around 30, I think 30 cents, that's right. 30 cents. Now, I decided here to go ahead and draw a Fibonacci sequence. Okay, now these are just retracement levels. It's just the computerized program that the exchanges have delivered to us. This is a premium edition of it. It shows the retracement, or the amount, the percentage at which there is a pullback from the recent low to the high event, high pricing event. So a 23.6% retracement is this first zone. The next zone is down to a 38% retracement from the low to the high, okay, of that overall overall pricing action, the 38.2. The 50%, okay, the 0.5 is very easy, guys. They call it a Fibonacci. It's just the 0.5 is 50% of the distance between this low and the high price action. So welcome to Fibonacci. It's that complicated. From the low to the high again, and I'll tell you, if you want to draw these, you go to the low, you drag it up to the high, and you just bring it on across, and that will give you all the levels on your specific pricing action. Now, the complication is it depends upon which pricing interval or which time interval you are in. So I would just say stick on the timing interval primarily, but it will depend upon which if you're on the 2 hour versus the 1 hour, if you're on the week versus the daily, it's going to adjust your Fibonacci's. They need to be reworked after you change, if you do change, and I always try and stay consistent on those. But as we look at this, I want you guys to recognize if we're scaling in, or if we're scaling, essentially we're scaling up the number or the amount of the retracement, which means, okay, once you've drawn your Fibonacci, okay, you're getting an idea, essentially a ratio of how much something that goes up is going to come down, hopefully before it goes back up. That's the whole idea. Now, individuals who may have gotten in around here, even on the prior pricing event, and this is a great example. It happens in a lot of investments, okay? The hype gets the crowd, etc. People will get in, let's say even here, earlier today. Now, look at these two. One is very aggressive. It gives the impression to the buyer there's no way of losing. It hits in here. Everyone is extremely excited. Let's go ahead and buy in. What happens? We see from the Fibonacci's, and it's just a good example. It's kind of a textbook example of the theory we use in not buying anything high. And I'll show how that protects you, or the strategy. Our strategy would have protected you in this instance, okay? Because you'll see this bottom level right here is 1. All right, now the 1 means a 100% retracement. Again, very easy, just the Fibonacci's all the way to the top. We drag this to the high, from the low to the high, all the way across. We start off with the 23.6 down to the 38.2, down to the 50% of a retracement. You've lost 50% of the value, essentially of the value of this price escalation. So as we move down to 61.8, this is called the golden pocket. Typically, something needs to happen here. It's kind of a golden ratio. They'll call that the golden pocket, so you know that. The 61.8. Just remember the teal and the blue kind of convergence there. The next one is 78.6. Now, that's 78.6%, guys. 78.6% of the value of this pricing action. Now, why is that significant? Well, it's significant because you want to continue to escalate, that the price continue to escalate if you're buying into it, most certainly, particularly if you're in and around this area in the top, which is kind of a no-go zone, I'll say, a no-go zone for us. It's very risky. And at the 1, understand that means you have completely erased all of your gains in the specific pricing target, or in this interval. Okay, so that's not what we want to happen, clearly, right? And something that's going just up, up, up. It becomes difficult when you see something like this, and it becomes frustrating for anyone who is involved along this area. With the amount of volume that we currently saw, there's a lot of people involved at this area. It may work out phenomenally well for everybody. It seems to be working out, but it can be frustrating nonetheless, and it can cause people to immediately have the reaction that they want to then exit. So in between this, let's just measure real quickly, and this is a good lesson for everybody involved. If we were to enter in at the top here, let's measure how much we would have lost down to this area. See, guys, you're looking at 23% of your money gone. All right, so I understand people want to get into a hot item. You need to understand also 23% of your $10,000 can disappear like that. Okay. That's a lot. 23% of your $100,000 can disappear like that. or if you have $100 or your dollar, whatever, for every dollar you have, 23% can literally vanish within a number of, is it an hour? Maybe it's 2,100 hours on through, yeah, about 2 or 3 hours, okay? So about 2 or 3 hours, you lost about 20% of your investment. Now, will it go up? It certainly can. It certainly can. It has been going up. It's been a phenomenal run. It's been incredible. At some point, okay, at some point, we would expect anything with a drastic price action to the upside to have a decent, a realistic correction to it. Now you're still up 73% on this specific item. Okay, that's phenomenal. That's great. You're up 73%. The problem is a lot of people got in around this top area. Okay, you see the volume in here. This is a lot in terms of volume. Look at the volume indicator on the bottom here. That's a heavy amount of volume running into this, running into here. So you've got, the volume carried you into these pricing events. That's a positive thing. That's what created the price action. But in terms of the people who are involved right now in here, they feel like dead weight. Okay, they feel like literally now maybe we made the wrong decision. It's about to cool off. If this were to cool off, this is the risk. This is the factor. The max factor, as we want to call it, the max factor in terms of why personally I would not be involved in this right now, because if this were to gain a trajectory in and around something which could be viewed as reasonable, say it had already gotten up, and I'll tell you guys, the estimate that it reached today at 30 cents was off the charts by any technical analyst's imagination or proffered opinion that has been purposely put out there. Now, maybe they were joking about it or otherwise, but that it's really been offered to the public. I have not heard one projection of 30 cents today. Most people were around the 16-cent mark. Okay, that was a reasonable projection, and now people were making. I don't mind if it's at 30 cents or 40 cents or $2. I think it's phenomenal. That's great. If a pricing action wants to behave that way, that's great. The only issue is, as it gains dramatic price action, okay, vertical price action, okay, with a great degree of velocity, and I'll define velocity for you. When you look at a price action, velocity is the amount that a price will change, okay, to the vertically, that it will change vertically over a duration in time. So when you talk about something that has a lot of velocity to it, okay, that means there's a lot of pricing velocity. That means it's gaining a lot of price. It's traveling vertically very fast in a short amount of time. So things that typically have a higher velocity to them, and yes, that means you will have this greater gain. Okay, you'll have this greater amount of gain. You'll have that 80%, that 100% on the day. That's phenomenal, right? Yeah, that's what we want. But that comes with a cost. The cost is the velocity. And when you have that higher velocity, okay, that's going to compromise your ability to maintain that price. Okay, that is the fact of the charts. That is the fact of the inner workings of the price mechanisms that you're looking at investing in. So the more attractive it is, it's going to have more velocity. We talk about things having velocity all the time. We're going to go for a moon launch. That's part of the dynamic of what we want in a price that makes it attractive. It sure does, but it also creates the absolute dynamic that a correction is necessary, because it becomes almost unsustainable in terms of maintaining the ultimate high price action. Just like that. That's perfect, huh? If you guys saw that, what a great thing for that to happen. Did you see the blank out on the screen? Perfect. Okay, I love that. Great timing. Whoever's in charge of my internet, I may have some friends at the local control station. I may, in fact. So I appreciate that. That's an example, guys. You can run into a circumstance where all of a sudden the fun's over. And as you guys know, with the exchanges, etc., as we've been through these issues, now I love the analogy. Everyone has to appreciate between Harmony One and Dogecoin what has happened on both of them. Both of them got so hot. Listen to this, guys. Both of them got so hot, the exchanges had to shut them down. Okay, Binance did that recently with Harmony One. Okay, whether or not you guys all knew that. Now, also that occurred with Dogecoin earlier, past, I think around February, with Robinhood. So we are talking about two of the hottest little notions that you can talk about that both kind of had to be trapped down by the exchanges. And I love the fact that the other page just blanked out, whited out. Why? Because at any point you can hit the glitch, and it's not necessarily even, okay, we understand the pricing action theory. We understand too much velocity can be dangerous. This thing has got to have some gravity at some point, all right? The point is going to be, well, yeah, it's going to have some gravity, and who else is going to have some brakes to push on and pump on if necessary? The exchanges. Okay, so that's the other issue, and both of these coins have had this dynamic. You guys appreciate this fact because, I mean, I'll show you the chart right here. You guys understand Harmony 1 was and is as phenomenal of a monster ride as and consistent, just beautifully done. Okay, 20x on your money. Okay. So it's been that phenomenal ride for people. What happened? Well, they had to push the brakes here. Too much velocity. Okay, I'll just say that when you're measuring, again, look, as you're measuring the vertical distance traveled over a period of time, it runs into a circumstance, a situation that's difficult to support those higher prices. The market maker has got to achieve a balanced market. And in a hot market, it becomes difficult for him functionally to continue to process this market accurately, and I'd say efficiently. And you know, look at Robinhood shut down, Binance shut down. Okay, there's problems within the exchange. And when I say a market maker, that's who's matching up the buyers and the sellers. Okay, they will take the buyers, orders in and around the top level and match up all of those purchases along the way with whoever has bought in earlier. The best way to think about this in terms of a market maker, people ask me questions all the time. Listen to this example. If I buy in at a lower price, this will put it as straight as I can get to it. People get confused all the time. I hesitate to talk about it. If someone buys in, let's say right here, at a lower price with volume, what the market maker will do, the market maker, meaning the exchange, his job is to take this volume at the lower price and to go, okay, if there's enough volume, to push that price up and market it, okay, literally bring it to market. And these days, you know that through your cell phones, you know that through your applications. They literally will distribute notifications that there is, let's say if it's either Dogecoin or if it's Harmony One, that such and such has increased in price by X percentage. Now that will excite people, and that will allow this individual who purchased at this lower price, okay, this hypothetical lower price, to have his coins sold at the higher price. That is what a market maker does. He enables that transaction between the buyer, okay, at the lower price, and the seller, okay, at the higher price. And he's marketing that. He's pushing out those notifications, guys. That's what an exchange does. That's what these programs do. Okay, whether or not you're using Binance or you're using whatever you're using, if you're using Voyager or Robinhood, that's what they do, is they make the market. Okay, and in the meantime, if you set it up correctly, you can essentially put the market maker to work to where you can have him go find your higher price. In order to do that, you have to find a lower price. So that's what a lot of our activity here is focused on, is ensuring that people get a lower price. Even amidst a run-up like this, okay? Even amidst a run-up like this, where everything is solidly, I mean, you are in the money. You are, and this is a strong, strong chart. Yes, you are. We still, even in something like this, we have an accumulation schedule that we can go through, that we can look at the Fibonacci levels. Now, Fibonacci's are just, they are pre-ordered levels, okay? These are just calculations, which this is the scientific kind of software, if we want to say that, the technological software, the genie in a bottle, okay, the exchanges give us, okay? They provide this to us. Binance gives us TradingView. This is the premium package. Binance gives this to us to use. So the Fibonacci's are part of that. The Fibonacci's are on every single program desk, trading desk on Wall Street, guys. Everyone knows about Fibonacci's. Everyone knows about the retracement levels, okay? So if we're trying to get in on this price action, look, we're hitting the Fibonacci's, okay? We're hitting these lower levels. We pepper in at the top. Great. We go about double down here. Great. We kind of get into the next one. All right, we'll add a little more. We'll double down on that. And what do we get? Well, we have maximized, okay, our the efficiency of our kind of our pricing action. Okay, we've lowered our cost basis as much as possible. Now, if it would have gone down more, well, we'd double down again. But what it allowed us to get as efficiently as we could get it in and around with this strategy understand we have maximized. Okay, we have maximized our efficiency in terms of a profit potential here. We've accumulated the most amount of coins at the lowest cost, and that's by peppering in at the top here, this first level. Okay, and we make these calculations. We look at this, we draw it over, etc. We put in our orders. Okay, and it's live or it's pre-calculated. We put in limit orders. If you don't have limit orders, okay, if you do not have limit orders on your exchange, guys, you have to change your exchange. It is so crucial. Now, a limit order is literally, all that is you're saying, I will limit my order to this amount of money and this amount of coins, period. You take my order or you leave it. That's where you're getting into some program trading. That's where you get to a sophisticated level of acquiring, okay, of acquiring something that's on the way up. All right, because you don't want to get into this zone. You just don't want to get into this zone. I call it the red zone for a reason, and maybe it's red for a reason. I'll say that, but these are the standard colors on the Fibonacci and the programs that we have that were given by the exchanges. This is the red zone. We don't invest anything at the top here, guys. The odds that it's going to continue from this top level are so minute. They're just so minute. We're going to let it go. At the next level, we kind of want to pepper in, and it goes in line with basic economics, guys. At a higher level, at an extreme high price, there may be no demand. At a high price, well, there's less demand. I mean, there's barely any demand, but there is some, right? There is some. As you get into a cheaper price, there's going to be a lot of demand, okay? There's going to be a whole lot of demand, all right? So that's how we structure in our purchases for anything, okay? Particularly if it's going straight up, absolutely, we keep doing it. Now, we would have gotten some exposure to the upside here. Well, let's look at the next price action. Let's look at the next price action. Let's bring this up and say, well, this is going up 10 to 20 times. I want to look at whether or not I'd even, any amount of money, that I would make on this. Would I be involved at all with this new kind of strategy? Okay, and there's a lot of strategies. This one is used by a lot of the key players. I'm talking about the biggest heavy-hitting players, guys, on the market. Big time players use this kind of double down, triple down approach in terms of acquisition so that you can ride this on the way up without any overexposure, okay? Because the possibility that this would crash down through here and present a huge issue is too great in terms of the leverage or the exposure it would give you in terms of the loss. Let's say you would be over leveraged at the top end of this. That's the last thing we want. If anything, like this one, would we make it on the level up? Absolutely. Look, we hit this level, so we pepper in at this level. We're able to lightly ride this up. We don't need to leverage in everything that we have into this level. No, we'll be patient, guys. I tell this to everybody. If it is a good investment, okay, everyone wants to leverage everything into a good investment, right? We get this notion that we have to just put everything into this investment. It's so good. I tell people all the time, if it's a great investment, you can take 10% of your money and you can put it in that investment and you'll make the other 90% that you wanted to invest to make the full 100, okay? You can take 10% of what you wanted to invest, on a great investment, and you'll make the other 90%. People don't think that way. No, we have to leverage everything into it. This is all about, this is the once in a lifetime deal. I'm telling you guys, if it's a great investment, you can put in the 10%. Just remember that. Now, as we look at these Fibonacci levels again on this pricing action, again, how do we draw it? Well, from the base of the pricing action up to the top and over, and let's see what we have. Essentially, you're hitting the golden pocket on this one. So you're heavier you're at the top level, nothing. What are you into? Say $100 here, maybe $1,000. I don't know what your investment, how much you have to overall invest. But the trick is, if it's 100, then the next level is 200. The next level, we're going to add up all that and probably say we're going to multiply that by 2. That's about 600. The next one, we're going to add all this up. Okay, then in the purple, we're going to say, well, that's probably 1,800. Then we're going to take all this, say, this is probably 5,400 down here. Now, the trick is you have to, I suggest that you like what you're investing in and understand that if you're investing in something you really believe in the story and let's say you want to go with it long term, okay? We plan for the market correction all the way to the bottom, and we do that with heavy, heavy insurance. And just as this is one level here, this entire level down here, okay, is an additional double down for us. So it works into the exposure at the top is never sufficient to clear us out of any market, okay? And that's a kind of a limited, kind of very risk averse approach to investing, and I hope that you guys appreciate that. The way that we come up with those, kind of the overall levels, I want to show you guys and incorporate that into the way that you think about your investment so that you're not overexposed. Okay, now this top level right here, if you know, this is a pricing action which has increased dramatically, okay, and it's a beautiful price action. It's a great example as we look at how do you catch something on the upside, how much do you risk even at this level. Okay, what we do is we have, if we're in this level right here, I'll just tell you, if we're in, for instance, let's say we're at this level right here, at this this level right here, let's say we're right here and we have decided to go ahead and invest in this level to try and get this break. Now look, if we draw our Fibonacci's out, we do get into this top level. All right. Now on $1 million account, I'll tell you, that top level might be something like $10,000. You'd have to do the double down and triple down. You'd have to do all of those calculations, and your calculations may change. But what this ensures, A, is it makes sure that whatever I get into, I know I'm committed to the long term. I like the story. I've researched the fundamentals. The technicals look sound. The market doesn't have any complications. It's something that I could discuss with my family, etc., and even with myself, just kind of relaxing and enjoying kind of the market that I'm into. I never just throw money at something that I'm not convinced of. In this top level, we do have some exposure. If you guys can see that, we're going to gain some exposure due to the correction here. So that's nice. That's nice. That's what we would want to look at. We have entered into a zone of investment, so that's nice. That at least gives us something to work with. We're in that top level zone. When I say 100, guys, it could be 100,000. All right, it could be 10,000. You could add zeros onto that 100. The level below could be a level of let's say 20,000. Down as we get down here, it may be 5.4 million. It may be 54,000. Okay, I'm not gonna discuss what you guys what you have in your accounts or what the appropriate levels are. I'm just gonna say it makes sense for us to have, okay, double down money at the lower levels. And I'll say that the greatest investors right now, the ones making the biggest returns, they have those levels of insurance. And why do they have them? Because as I discussed the velocity, okay, I discussed the velocity a while back, the amount of vertical price action traveled within a duration of time. The shorter that duration of the time and the greater the amount of price action, okay, the more we have a rocket ride. There's positive price experience. Everyone kind of in a hypermanic, I say a hypermania. Just a very, the mania of the market has grabbed the attention, and no one can help it. Everyone has to get involved in the investment concern. What does that do? It pushes prices through the roof to something which is going to be the incidents that you're looking at right now with Dogecoin. It's going to be looked at as a phenomenal event. It's going to be a historical event. Okay, a lot of coins right now have performed extremely well, like Harmony One. A lot of them have. Okay, they all have an incredible amount of velocity to the upside. What happens after that? Now, what's going to happen at some point with Dogecoin? It's going to have to. It's going to experience some degree of retracement. Why do we have some degree of a double down approach ready? Because if we did get in anywhere near this red zone at all, ultimately when it decides to crest, on this retracement, we're going to work this retracement with our reserve funds. Okay, that's going to ensure that essentially we have insurance. We're not going to experience a loss. How does that work? Well, because if and as it continues to retrace and experience a normal pricing action, and essentially what you have to do, guys, you have to look at the individual intervals that we discuss right now. Just remember, as we looked at the individual pricing action here, okay, and this is kind of a reality test for people as they look at the overall, because they'll say, no, we never want it to go down. It's not going to go down. It's just going to go up. Well, look at this great pricing action right here. As we draw the Fibonacci onto this pricing action, it sure did. It got down into 50%. It got to the 0.5 level, didn't it? Right in this area between the green and the teal. Sure did. That means it retraced from the low to the high of the price action. It retraced 50%. That's what the Fibonacci tells you. It's an easy indicator. So if you look at that 50%, just remember, okay, remember that as you look at buying into something that is escalating, well, let's have a realistic discussion, because as that gravity sets in from that wonderful velocity event to the upside, well, where's the 50% retracement? And this is the type of talk that will get you really thinking in terms of, but wait, we're supposed to make money. That's right. You are supposed to make money, which is why at the top levels we have very little amounts of money available. Okay? If we do, it's going to be on a retracement and it's going to be a light amount of money. Not that we don't want to participate at all. We're still going to achieve participation, but it's going to be at a very light level because the odds are it's going to receive some degree of a retracement. Now, we just saw on the smaller interval the 50%. That was still a great pricing dynamic, a great interval. It still continued to the upside. It sure did, absolutely. But as we look at the overall pricing dynamics here, guys, you know that, well, at some point that velocity may wear off, gravity may settle in, and if we get to the 50% level, for us that has to be a good thing. That has to be something that we look at and say, well, I sure hope it does. I've researched it enough. I know enough about it. And we're ready to double down. We are ready to triple down into this at the next levels. Okay, now that's a very sophisticated approach by some major heavy hitters that run markets, okay, that really know how to work markets with consistent returns in excess of 40% a year, guys, 40% a year. And we're talking big money at 40% a year. So that's the approach that they use. We wanted to get back to 50%. If and when it starts to drop, well, great, we have our reserve cash. We have that ready to double down and triple down. Okay, once it retraces, there's an opportunity and a likelihood that it's going to go up. Not every time, but there's that likelihood. What we know, and please focus on this, what we do know is that if and when it does continue to retrace, even say to the golden pocket, which seems very extreme on the aggregate, but it doesn't seem extreme on the individual pricing level, does it? Not at all. See, this has a character kind of in the micro and the macro, okay? With the magnifying glass and as we zoom out, relax, okay? And as we look at the overall pricing structure, if it were to, just remember this 0.618 or the 61.8 is called the golden pocket. It's a golden ratio. It's necessary for the functioning of the growth of the market. Okay, that's literally the calculation that is necessary. It's called the golden pocket, the golden ratio. It's a critical ratio. A retracement back to this ratio is considered very healthy, okay? Expected and very healthy. So when we get into, well, this phenomenal pricing, just cannot permit that kind of a retracement, guys, it does all the time. It comes back to here. And if you have invested along at these levels and you don't have any cash to reinvest, to reaccumulate, you can't adjust your cost basis at all. So before you go chasing anything with all of your money, please consider your reserve. Please consider your foundational money that when it does retrace, and this makes you a sophisticated investor, when you're able upon the retracements to say, this is my price target. If and when it hits this, I'm ready, okay? I'm ready with a double down of everything I've invested. If it hits this level, I'm ready with even more. I've researched, I understand what the investment is. I like the company, I like the technology, and I'm ready even if it goes to the golden pocket. I'm going to be ready and I have additional money there, a double or triple down of anything else I've invested. Guys, that expands your volume that you acquire drastically. And the good thing about it is you don't need much of a move. If and when it does hit to the 61.8, if you have, let's say, tripled or even quadrupled your investment at this level, if you have quadrupled your investment, a lower price, guys, your volume is going to be through the roof. That means every single slight movement, every unit of price increase, every unit, every cent, every fraction of a cent is going to offer you a tremendous gain in, let's say, in relation to, it's going to offset, let's get there, it's going to offset any of your previous investment. Why? Because this is double or triple down. You have 2 to 3 times the entire amount of money you have here. Okay, so every fractional movement to the upside, every increase in price, fractional increase of even a penny, a cent or a penny, whatever fraction of a penny you're dealing with, you're going to be dealing with the volume that's going to eclipse all of this amount of money very quickly. So you don't even need to get back and go through that full, let's say that full range of the pricing. You literally are going to achieve that probably with a short little ride here. And all this is going to disappear. You understand how those fractions and those ratios work with a larger amount of volume at the lower levels. And the lower level may be right here. You may never need to worry about that. But always plan for the contingency that the Fibonacci's are there for a reason, and that there's kind of a reason for a retracement. That gravity will hit you at some time. It will hit you at some time. And I bring that up because the velocity has been fantastic. It's been fantastic. If I can't get back into this, it's so funny. I think it's really great. It did crash on me. It crashed with Dogecoin. I know you guys were having some problems ordering your Dogecoin. I think even TradingView got hit by the Dogecoin. It's throwing me back into Harmony One right now. So we were discussing Dogecoin. It had been up 100%. Now I think it's up about 88%. We're talking about the dynamics of catching something on the upside. Okay, we're talking about that, that kind of a difficult place to be because you're sitting there and you're watching it keeps going up and it keeps going up. Well, we can gain exposure to anything on the upside if we use the tools that we have, and we use normally a Fibonacci retracement, which gives us some ordered levels to look at, and we never invest at the top level. We just don't, even if it's a runaway train. That's not what we just can't go in. We can't go in that zone. So we always look for this retracement beyond that red zone, and we plan for it to retrace even greater than that down to, let's say this one, got to the, what is it, 0.382. Just say the first green level. You guys draw it up from the base to the top. It's very easy. Give yourself some sort of standard. When you look at that, it got into some zone, kind of pepper it in at the top. No big deal. We'll pepper in at that level. Then at the next one, we're going to double down. We want more volume. We want more volume at a better price. Okay, that's logic. That is in line with economics. Okay, the higher the price, the lower the demand. So the lower the price, and please consider this, guys, the lower the price, the higher your demand. Okay, and everyone gets wrapped up into this market mania where something's going through the roof. You have to understand, the lower the price, okay, the more retracement that you experience, then it makes sense for you to have a higher demand. Then it makes sense for you to, and that's why I use the double down or triple down approach. You get into the most of your money being at these bottom levels. And these are all kind of preordained little levels here. These are all scripted out Fibonacci's given to us by the exchanges. They know we use these levels. They know traders are very involved in using these levels. So this ensures that we kind of comply with market principles and common sense and reason, etc. So I would never throw all of your logic or your understanding of economics or business just out the door. I would never do that. And I caution you, whenever you get involved in something, you want to just react with haste, or you want to jump in on a train. First of all, your investments, you guys have researched a lot about your investments. I know that. I've discussed a lot with a lot of you. You're very technologically savvy, and we have a great community here, and we appreciate that very much about you guys. You guys, in terms of the subscriptions and notifications, you guys know we bring you extremely efficient materials and at a very educated level, and that's our purpose, is to help educate you. I have a previous ownership experience with a private hedge fund and some great education in and around some Ivy Leagues, i.e. Harvard Business School. So you guys can pick up on some details from my experience, and I can continue to learn from you guys as well. You guys are very intelligent people. As we look, for instance, on this one, as we look at this trading interval, one thing we wouldn't want to do for sure is catch this on the upside, and this is very applicable right now to where Doge is at right now, because we see this kind of this pattern that's achieved a lot of velocity, which means a lot of vertical price change within a short amount of time, just right through the roof, and then inevitably we will kind of see this retracement over here to the downside. That is the part that no one wants to get involved in. And it's just not, it's not going to be nice if you're purchased in and around, let's say, the 20 cent mark here, or the 30 cent on Doge. If you're purchased in on the 30 cent on Doge right now, guys, you don't want to be down at 20 cents. You just don't. And that's going to cause a lot of problems. Let me see if I can clean up this to let's just see quickly where Doge is at. Where is it looking? How far up this ladder do we have to climb? And I've drawn some different, here we go. It keeps on going. Okay, there we go. We have probably some dogs that are about to get let out. That's okay. Yeah, let's see. Now, would you have hit any of the investment levels on Dogecoin right now? Let's take a look. You guys, I mean, is the strategy too conservative? You would not have hit anything. You would have missed all of this. I mean, it went up 100% today, and you wouldn't have been able to get in on any of that. Well, let's look at our approach. Let's look at the basic approach so that we can learn something about this. Let's take the first one here. Let's take the beginning of the trend. Let's draw up our Fibonacci's on through the top of that level. All right, let's take a quick look at this. Now, well, that's good news. That's good news. Okay, this is real good news. And let's get this up above the previous. The way I draw a Fibonacci, just so you guys can learn, I try and get the baseline here. This baseline, I try and get it to where the dotted line is directly above, okay, directly above any of the preceding higher events here. So when you're drawing it, the trend typically will try and eclipse any previous high action to the left. Okay, within a reasonable, particularly if there's a consolidation to the left, we always try and draw this initial line above any of these. This would be pertinent right here, this area right here, this little increase in price action there. We try and draw it there. Now, why is that important? Look, when I draw it right there, look what happens. Bam, we are right on with this pricing target. Okay, and this is how, guys, you want to watch the channel perform. This is how, believe it or not, we're able to, even in a sideways or a downward market, we're able to double our money. We come up with pricing targets at double and triple the amounts, okay, of the preceding levels in a different kind of dynamic. We're able to cruise something through the roof at 30%, within 2 or 3 days, 20%, 2 or 3 days, 30%. We get exact with this information. So the fact that this complies, this one here comports perfectly with Fibonacci. Why? Because the pricing retracement literally comes in right on the money at the 50%. Now that is a concurrence that I see that says absolutely, absolutely, we definitely would have picked up something in this area with the strategy. Lightly peppered in on top. As it were to work down from this low to the high event, as it were to work down through here, we lightly would pepper in, say $100, or maybe it's 1,000 or 10,000, but you know, if it's 10,000, okay, you've probably got $1 million down here that you're willing to invest. Okay, and you have amounts below that to plan for the contingent that it were to go below that. And it doesn't matter if you specifically have that, but that's the theory, that's the strategy that's put forth. So we would have picked up, absolutely, we would have been watching and put it, essentially, when we reach this maximum, when we reach this peak, okay, when we reach the peak, we're going to do the calculations, the Fibonacci's. We're going to put in our orders. So once those orders are put in the form of limit orders, if you don't have limit orders on your exchange, you have to change that. You have to find limit orders. But this is just to show you guys that literally we would have been able to enter and enjoy the upside on this. So I hope you guys appreciate that. This is a little bit more complicated in here. This is what worries me a little bit in here. In terms of velocity, this is maximum velocity reached. I think you guys will agree. It's like we have reached, we have escaped the atmosphere, literally. And the velocity, again, the change in price, okay, vertical price, okay, over a specified duration, or depending upon the amount of the duration. In a short duration, a high vertical change in price means a high velocity, okay? When you get into a high velocity, I'll just tell you, a high velocity typically means that there's going to be some degree, at some point, a greater degree of gravity exercised on the pricing action, which means potentially a bigger pullback into the Fibonacci's. And we don't want to see that, right? We don't want to see the entirety of a pricing action just completely collapse. So we don't want to necessarily see that, particularly if we're in at the higher levels. So we always have to plan for that contingency. We have to plan for the contingency that it's going to go lower. And the only way we can guarantee that we make money on the trade is for us to essentially have a compound level of money at the lower levels. Okay, so we're going to double down or triple down if it falls back down below this 100% retracement. All right, but notice that we're still going to get involved. It's at that top level. That's all right. Yeah, we pepper in a little bit of money. All right, that's what we said. We pepper in a little bit of money. Yeah, $100, something light, just to enjoy this price action. And you'll find, guys, if you decide to employ this type of a strategy, you will find that your entire life will change. Because I meet people who trade on the aggressive, and I mean they trade on the aggressive so much, they will see something and they will deploy their 5,000 or their 10,000 or their 100,000 or their million. They will deploy it into whatever mechanism, pricing mechanism they feel that is going to create the most aggressive returns for them, without any calculations. guys. Without, and guys, I deal with some big people. Okay, I'm around some different levels of investors that literally even they want to deploy this full throttle everything into what is the most aggressive type of gain instrument, and that's not the goal. That's not the goal. What's nice is if something's gaining like this, and you believe it has additional potential, well, we're going to draw our Fibonacci very simply. Why? That gives us some calculations that makes sure that we are in line with market principles. Because now I'm drawing something and I'm realigning myself with the fact that at higher prices I have a lower demand. All right? That will guarantee, guys, that I'm in line with market principles, supply and demand. Very easy. At higher prices, I'm going to have less demand. At lower prices, even within these individual pricing intervals, I'm going to have higher demand. If you operate in concert with economics, guys, typically you'll do very well. All right, and if you do that in line with having a double or triple down below you, guys, that's your insurance. Okay, so don't ever achieve overexposure and think that it's worth. This is one slam. This is one. What are you going to say? This is one up at bat baseball, and we're going to hit the grand slam this time. No, we don't want to, go up. We're not pro players. Most of us are not going to be pro players to hit it a grand slam every time. Particularly, just be careful. Particularly in an instance like this with high velocity, you're just in an instance where I mean, guys, it's just the gravity will set in. We will have a retracement, which is why it's nice to be peppered in just a little bit, and just watch what that does to you. You mean you don't want to put in $5,000 or $10,000 or $150,000? Well, if you got $1 million underneath it, maybe $5,000's okay. That's fine. But you're not going to risk having a bad year over this stuff. I guarantee you don't want to do that. You don't want to risk getting thrown out of the game. I'll tell you that. And I'll tell you, if the whole market goes away, you don't want to risk not having an account to pick stuff up when it not goes away, but when it crashes. If you experience a very extreme pricing event to the downside, I won't use the word crash, probably get picked up on by the algorithm. But as we look at that, if and when that does occur, if you typically ask people, it's like that's the time to buy once everything goes back down. So you want to have cash available for that contingency. And you see exactly what I'm talking about here, guys. The amount of velocity of this specific pricing action, guys. I draw the Fibonacci. And it's just, I might as well. It's literally on the left-hand side here. It's barely even breaking into the Fibonacci chart. So that tells me that there's just a tremendous amount of pressure, a tremendous amount of money that's being scheduled. Okay, it's being scheduled and delivered into this economic interest, into the financial instrument that you're looking at. I believe it is scheduled, it is planned, and I believe firmly at some point there will be a pullback. Okay, at some point there will be a pullback. We don't as of yet on this, and we covered on Harmony One as well. Harmony One experienced kind of a technical glitch and concern. Okay, you guys will know that happened with Harmony One. It also happened with Dogecoin. Okay, Harmony One, it occurred after 20x on the money, 20 times your money. It happened with Binance. Okay, it caused some disruption. We've gone through a retracement since then, okay? And we have fought very hard to stay on top of the technicals. We've done a great job. And the Harmony One chart is looking excellent, guys. It is looking very nice. It is smoothing out, and it looks like it's about ready for the upside. It's looking very nice. We're very happy about that. But Binance on top had some issues. Now within this trajectory, we're looking at uncharted territory for Dogecoin. It's about 25. I'll bring up, guys, I mean, it was at 30 already, okay? It was literally at 30. Now, it may be kind of turning around here. It may be doing a retracement. Irrespective of that, if we decide to get in, okay, well, that's fine. We'll go ahead. We'll get in. We've collapsed out of the red zone, and not collapsed, but we have made it out of the red zone. Now, I'm going to apply basic economic principles. Okay, what is that? Well, at higher prices, I have less demand. At lower prices, I have more demand. Okay, very simple. If you stay in line with market principles, you're much more likely to profit in the market. People don't behave that way. It's not easy to understand things in that dynamic because everyone's chasing the next hot deal. You'll still get you'll still get involved with this strategy, and you'll get the better price, guys. It increases your possibility for profit. Okay, it's that easy. So now you say, well, I won't have as much exposure. Yeah, you won't have as much exposure to the high amount of risk of a collapsing market. I just tell you, it doesn't have to collapse, but just a normal, I mean, I'm just going to say this, and you understand this, just within, okay, a period of an hour, okay, you're looking at 20% loss. So before you just haul off and say I don't need any rationale, I don't need any kind of sophisticated tooling or even an approach at all to buying in, I'm just going to buy. Well, that approach may have lost you 20%. Okay, and that's a drastic approach for you guys to take. Now you were up 100%, you're about at 90%, so you've recovered some of that. But that's not to say that people didn't get afraid and sold out when they lost 20% of their money. So we don't want that to happen. What's wrong with allowing this to reach a peak, drawing up a Fibonacci, or making some calculations, however you choose, is fine. What's wrong with doing that and saying, okay, I'm just going to pepper in and around the top once it gets to this level. And you know what? It got down to this level. That's fine. I'm going to enter my orders on a computer. I'm going to calculate this and say, okay, I'm going to look at this right now and in and around, okay, my first level is 0.24. All right, great. At 0.24, I'm going to put in $100. $100 it is. Okay, great. At the next level down, I'm going to probably double that because I know at a high price, I'm going to have less demand. Okay, I'm going to have more demand. Now, at 22 cents, that's a better price. The first one was about 0.24 or 24 cents. Now it's about 22. Hey, it's a lower price. I have more. Okay, I have more demand. I'm going to go ahead and put my limit orders in, calculate those real quick, put those in the books, bam, send those off, see if they get executed. I'm going to double my money. Okay, and I mean double the amount of money on that limit order. And what will I do? I'll achieve more volume, okay, at that level. I'll do the same thing here. I'll look at and see, this is how I build my order sheets, okay? This is how I build in my orders, okay? I'll go ahead and submit these. I'll program this. This turns into a program trade, okay? And as I go down to each individual levels, guys, I'm doubling and tripling down at every single level. If I start with 100, I go 200. I probably add that up. I go 600. Okay, instead of 3, I'm gonna add that up, which is 300. I'm gonna double that, which is 600. Then I'm gonna add all that up and double that, which is probably 1,800. Okay, and I have to be prepared to get involved at this level. And most people will think, and please understand this, most people will think, well, if I have, say, $8,000 to invest, I'm gonna invest it all right here because I don't know, it might go up from here. You're right, it might. Okay, it also might lose 20% from there, or 50% from there. It's had some incredible velocity. The smart decision is to guard against your risk and say, I'm still going to achieve some degree. Now, it may not be $100, guys. When I say that, it may be 1,000. But if it's 1,000, I bet you have a lot more down here because basic market principles are you have more demand at lower prices. That's just the way it goes. Now, it looks like it is picking back up. If it picks back up and goes up, guess what? I have a nice position in here, a nice little position I was able to create. Nothing drastic. And I know I exercise some discipline. This is a nice thing. I know me as a trader. I exercise some calculative kind of discipline here. I went in with an approach. I made sure within here that with the lower prices, I would have more demand. So at least I'm approaching it with a good strategy and something that seems to be highly out of control. And particularly, I'll tell you guys, if I move this to kind of our rule of being across from the next previous high right here, and this is where you get into some issues. Okay, let's eclipse this next this previous high right here. Let's draw it like this. That's probably more accurate. Well, that's good. That's good. Now, what does that give us? Well, if that and this, guys, look at the Fibonacci's right now. Look at what I'm teaching you right now. Okay, you may know these already. If you don't, pay attention. When I talk about pricing targets that I'm able to come up with on the channel, we discuss those in our Discord. There is a Discord link that's on the top. It's the link that's pinned at the top. That and our Twitter. I want to give you guys our Twitter because it's very positive. It's a good Twitter, and you will be able to just type in the Kingdom. Okay, we're the Crypto Kingdom. That is the name of our channel. Type in the Kingdom, okay, and go ahead, and you'll have to scroll to the bottom. Let's see, scroll on down to the bottom, put Go to the Kingdom. All right, and when you click on Go to the Kingdom, it'll pull us up. Click on follow, and we can get you plugged into our Discord. That's where our kind of back channels are, where we go over pricing targets. I bring that up right now because on the Fibonacci here, literally exactly it was met. When you see this confluence here, and I can probably literally, okay, when you see the exact confluence of of a Fibonacci, easy for me to say, huh? I can only say that word so many times. When you see a Fibonacci confluence like this, the exact target, understand at this level, we have more money. Okay? We peppered in up top. This in here, we're going to double it down. If this is 100, this is 200. We put these orders in. This here is going to be about 600. Okay? We approach it with more money with lower prices. That keeps us in line with basic supply and demand, guys. That makes us function like a rational member of the market. And if it were to skyrocket up, that's great. But you see, we've already gotten down to the 50% retracement. So that's a big deal, guys, that we've gotten down to the 50% retracement. Okay, that's a significant gain that you can have on your position in terms of your accumulation, your scheduled accumulation. So we want to exercise that amount of discipline. Okay, that's what we focus on in this channel, and you guys know that. Now, if we're in at a very light position here, I'll tell you what, that's fantastic. If it goes up, that's phenomenal. We're excited, right? If it were to go down, that's great. We're going to accumulate more. We have orders on the books. We literally look at this level and say, okay, at 24 cents, 24.1, we're going to put in, if it's $100, at 23.1. And you get these right next to the Fibonacci's at the 23.1 or the 23.09. We're going to put in, what is that? If I can read that, hold on. We're going to put in, at the 0.5, that is 23.09. We're going to put in, let's say 600, and we're going to put in 1800 at the 618. We're doubling down and tripling down. It makes sure we're not overexposed. All you're doing essentially is guarding your money, okay, away from buying in at high prices, and you're assuring that you're operating as an ordinary kind of prudent, rational investor, guys. Because don't get caught up in the mania. It's not worth it, especially when you can kind of pepper in. If you have to be a part of it, you can pepper in. And I just mean that just very lightly as it reaches this level. Now you reach another level down. That's fantastic. Okay, so it's going through a correction. Okay, it's going through some retracement, I'd say, along its way up. It's allowing you an opportunity to get involved in it. Now, on the aggregate, I'm going to talk about this real quickly because I want everyone to understand what the aggregate means, okay, and how that's going to affect your overall picture here. All right, I'm going to discuss this. Okay, I'm going to go back to the 6 cent mark. Okay, the 6 cent mark is where I would say this trend recently began. Okay, this trend recently began on Dogecoin. We'll apply this back over to Harmony One in just a moment, but let's learn something, guys. Let's learn something. Let's all learn something. And it's a great chart for us to learn something with the phenomenal amount of kind of pricing action that we've received today. This will be history, guys. This is a big day for a major altcoin. And congratulations to the market. I hope it doesn't unravel it. If it does, maybe it was just about time. But I don't think that it will. I think we'll be all right. It seems like we have a good season ahead of us, so I'm excited to enjoy that with you. Let's look at these retracement figures, and I want you guys to kind of step up to the plate here and realize what this means. All right, realize what this means in terms of your investment right now. You want to get involved along the way. I just showed you on a macro level or on a micro level. We got out the magnifying glass. We got into the levels. I'm saying, yes, you have an opportunity to get involved. Now, listen to this. As we look at the macro, okay, as we take a zoom out on this, I'm applying the Fibonacci to this entire trend. All right. Now, what is that telling me? Well, it's kind of telling me that it's possible. Okay. And first of all, I want you guys to see this. Please pay attention to your screen. Okay. This is kind of groundbreaking information you need to understand. Look at the Fibonacci levels and how well tiered this already is. Look at this first level of support. On the first step here, you have the price action to the upside. You have kind of a consolidation. What do you have? A phenomenal exact level of support at the 0.78 of the Fibonacci. Okay, it couldn't be more target precision, laser guided, perfect strike on the support line. Perfect. All right. Now as we go up, all right, it looks like you skip a level. What do we have here? Well, it looks like we have kind of a level 2 in terms of a step up. We have a perfect, near perfect contact. We can get down to the micro elements of this, and I can spend some more time in drawing this. We have a perfect contact in terms of a retracement at the 0.50 or the 50% level. This gives you a pricing structure to work with, and it lets you have some dependability that these functional numbers, okay, are built in. Guys, it's not just to this right now, it's to everything. This is why we deal with these numbers. Now, we're a little bit short on this. I'd like to look at the candles. I tell you, if we look at the candles, I guarantee you, we still made contact with this top level. We experienced, we shot through in terms of the vertical price action. We exceeded through this top level. Great velocity on it. Nice chart. You got to say it's an impressive chart. It'll go down in history. It's beautiful. Now the 0.23. Look at the fact that we literally have touched almost exactly on this retracement. That's why we use Fibonacci's. Be careful if you don't know how to use them. Please be careful. Do not make decisions on Fibonacci's if you don't know how to draw them, if you don't know whether to use a candle, if you don't know whether or not you're in the right time sequence. Just be careful. Sure enough, absolutely we hit it. Okay, so these numbers are literally drawn in, and they're important calculations, guys. They're important in terms of your understanding of not only kind of how things are I guess structured. I don't want to say structured because people say, well, it's being manipulated. I don't know that it's necessarily manipulated. I just think it's part of the growth. I don't know if we say the growth dynamic that's necessary, or that it may have something to do with the exact. What do you want to say? The exchange program? We don't need to get into the exchange software, etc. It's just the growth dynamic of the pricing action. That's all you have to say, because that's essentially what Fibonacci's explain at their foundation is the growth dynamic of the pricing action. If we had to sum it up in one sentence there, or one phrase, the growth dynamic of the pricing action, you can see that evidence before you at these different levels. You just saw with the candles, yes, we did hit this level. So what does that tell you? Well, it tells me that there is a consistency that's being built up here, and that yes, there is a degree. I'll stick to the pricing action. I don't want to get into any kind of speculation in terms of exactly what's happening. Just understand market makers use these. That's why this works right now. That's all we need to say. But do be prepared. This is the important part. Aside from your understanding what it is, clearly you see what it is. At this bottom level, yes, there's two support contacts. Okay, at this next level up on the 50% retracement, yes. Now these are not the retracements. The retracement's going to be different, and I bring that up because it could occur on this specific pricing instance. It could occur on a much higher one. Okay, it could go on up to 50 cents or 75 cents or $1, and then we would have to worry about retracements. But what I will state is that you need to be prepared for the possibility that given the structured events here, guys, this is very well structured. If it wants to continue at all to perform on these structured events, it may want to retrace to some of these structured levels. And I hope you guys appreciate that, because we do see an interaction, a strong interaction, okay, at this level, the 0.78, which would turn into the 0.78 retracement. We're looking at on the upside, but because they are significant right now, because they involve multiple touches exactly and precisely, because this 50% mark involves a perfect strike, because this next one at the 0.23, because this involves a perfect hit, and it's so well ordered, these may be positions that the price action wants to return to at some point in the future on a retracement. Okay, it has already exhibited a degree of some phenomenal degree of at least a what we call it, a confluence. I would call it a confluence without getting too fancy. It has exhibited a confluence, and something which we cannot ignore structurally. So we would think, because it has exhibited such strong traits in conformance with the Fibonacci's, that it may want to revisit these in the future. So please remember that, because that essentially means at some point in time that it may want to revisit or retrace to these lower levels. Okay, it's already shown a prominence at these levels in terms of support. It may not need to revisit them, but having shown this interest specifically at these levels makes me think that it has an interest, maybe it has an interest in, I'll say this, in experiencing similar events at higher levels, but it also makes me think that it might want to return to these levels. So these are the types of this is the type of analysis that I would do in terms of making a decision that, yes, I would like to be involved, but in terms of my acquisition strategy, I'm going to make sure, okay, I'm going to make sure that as I try and catch this, let's see if I can pull up another one of those little smaller events that we were on real quickly. Let's get back to, I think we can get back to around here. Well, if I can try to get there, we may just redraw another Fibonacci. Let's get back to, we can pull this one up. This is one. This is the one I wanted to get back to. I appreciate the patience. Thank you. But as we look back in this, it's easy to say, well, let's just acquire. Let's double or triple down our approach. Let's put more money on the downside. The higher the price, less the demand. That's fine. Less demand. That's in line with economics and basic theory of supply demand. The lower price, yeah, we want more demand. That's fine. That's how we're going to schedule our orders. Fantastic. Well, if we throw in all the money in this area that's available and you don't have any amount of money at all to cover you in the form of insurance, and I just say insurance, guys, because it makes it very difficult for you to lose money, okay? It makes it very difficult for you to lose money if you have what's called insurance or amounts of money that are available at lower levels, okay? Once you revisit these areas here, okay? Once you revisit these areas, you'll be able to reinvest, accumulate a larger amount of volume. It's already shown you that this thing, guys, it knows how to run, okay? If it knows how to run now, it's probably going to know how to run in the future. It's going to have a dynamic pricing action. That's why we like Harmony One. To tell you the truth, those of you who trade, I will tell you, we have a blast on Harmony One. It has some of the best pricing action. I'll tell you, every 3, 4, 5 days, this thing is lit up, and we are right on it. And I'll tell you, the same way that you're seeing these contact points, guys, I know how to draw these charts. I was a financial analyst at age 22, working on the opposite side of Harvard endowment, putting $1 billion equity fund trust together. So I specialize in this stuff. I specialize in financial analysis. I love it. Private hedge fund ownership in the past, etc. Did very well. I love the market. That's what I do. I love charts. I love price action. I love being able to help people. So if you guys would like to subscribe, that'd be great. If you'd like to turn on notifications, it'd be great. You reach out to us and say hello. I'll never contact you via these comments via WhatsApp. I'll never do that. We do have a giveaway, so you guys know we're giving away 2,000 Harmony One coins on our Discord. Check it out. That's the pinned comment on top. Check that out, 2,000. As we look at this stuff, that's just for fun to support you guys and welcome you guys to the group. We have a great group, and it's just fun to talk about issues like this. I love the dynamic between Harmony One right now. I just tell you, because guys, we've been enjoying price action like this, and Dogecoin has been waiting for this. So it's exciting to see everybody come together. And the thing about Dogecoin, it was held back by Robinhood. Thing about Harmony One, it was held back by Binance. They got involved in Binance. So these are kind of two similar cats that have wound up on the same alley here. And it's nice to be able to discuss them in kind of professional terms for everybody to kind of understand what we're saying. What I say, these have been visited. You guys understand that. They have been kind of the chord has been struck perfectly, right? It's been perfectly struck in terms of these support levels on the way up. It's showing us a very structured pattern. The structured pattern may continue on the upside, but it tells me that they may want to be revisited at some point. We don't know at what point. But make sure that you have, if they're revisited, make sure that the whole kitty doesn't go in up top. If it does, you're not going to be able to rebalance your position at all. You have to strategically look at your acquisitions. If you put the cash in and you hope for the best, and something does happen and you're down, the worst position to be in is in an overcompromised, situation where you find that you've lost the leverage and you feel like you have no options. That's not worth the upside. I promise you it's not worth the upside. And a sophisticated trader, which it seems like you guys are, a sophisticated trader will not put himself in that position, will never put himself in a compromised position. Still, you'll be able to enjoy this upside. And you guys know how. That's right, we will draw our Fibonacci in here. That's right, on this current price action, we'll draw that Fibonacci, okay? And we will say, and we line this up with the previous peak to the left, okay? And we watch this beautiful dance that this will do right along our Fibonacci, okay? Just like the previous, right along our Fibonacci. What is this one doing? It came right in touch with this level of the Fibonacci at the point 5, okay? Dynamic software, dynamic technology, guys. If you don't use this software, you don't know what you're missing. in terms of your market profitability, in terms of your trade. I mean, if you're trading, if you literally are trading or you have any interest in it, if you're not using Fibonacci's, you guys, it'll change your life. It literally will change your life. It'll allow you to start trading, to start pinpointing things, and that's what we do at the channel. I'll bring up one more time just so you know, we develop pricing targets exactly like this by using the software, but we know how to use it. And I mean, we know the time frame, the intervals, we know the adjusted candlesticks with the line charts, etc. We do exactly what needs to be done. That's just my background. I'm able to do that. Thankfully, I have a degree in that kind of stuff and a little bit of graduate work, so I can bring that to you. In terms of our Twitter, I want to bring this up to you guys. Just go to Twitter, type in the kingdom, all right? Type in the kingdom. You'll need to scroll to the bottom. All right, when you click on that bottom, you scroll to the bottom of that menu, click on it, and it'll come up the Crypto Kingdom. That's us. I'm London. It's a pleasure to come to you and talk to you tonight and discuss these bigger issues. Just click on follow and click on notifications on this, definitely on this type of a situation with YouTube is very helpful because, guys, we publish, okay, and I talk about specific pricing targets. Not just on the way up, not after we've covered an interval and after I'm drawing a Fibonacci. No, guys, no. I'm talking about on the way down, okay, once a retracement begins and people need to recover their money. Yes, I'm talking about calling out this 13-cent line, okay, with Harmony 1, and bam, people making 30%, like precisely, exactly this exact amount, okay? Talking about this exact amount, this exact amount, this exact amount, okay? Essentially multiplying your money, even in a consolidation or a retracement. That's not easy. It's just not easy, but that's what we do. So if you're interested in multiplying your money or getting good returns, and we could use your help. Why don't I say that? We could definitely use your help. I'm going to look at the comments real quickly, and in terms of using your help, if you would like to be a part of a community that is building good traders, you have found the right place. We have some dynamic people that are very involved and enjoy precision trades. They enjoy programming up. As we look at this and draw this Fibonacci, the goal of this Fibonacci is to give us some sort of calculated level that we can say, okay, there's been a pricing event to the upside. Now what do we want to do? Well, we want to scale in our investments, right? Absolutely want to scale in our investments. Let me make sure this is just perfect over here. There we go. And how are we going to do that? Well, at the top level in the red, we don't have any money for it. I just guarantee you we don't have any money. At the next level down, we have probably $100, maybe $1,000, depending on whether or not you have 10,000 at the bottom or $1 million. This is a scheduled approach, and it just gives you an idea. It's not advice. It gives you an idea that you need heavier money at the bottom. Okay, and why does that make sense? Because supply and demand. Okay, with supply and demand at the higher levels, there is very little demand. Okay, higher levels of price, there's very little demand. Okay, at extremely high prices, there's no demand. This is extremely high. That is the new high. Literally, that is extremely high, so there's no demand. Once it gets, well, it's kind of high. It's still high, but there's some demand, okay? So $100. We double that as we go down. So if it's 200, then we double the full amount in the next level. In the teal level, we say, okay, that's 600. Then the next level, okay, fine. We're going to double that full amount already up there. We're going to say 1,800. And as that goes down, we get into 5,400. Now, below these levels, okay, below the level of acquisition there, and I'll tell you, it doesn't matter if it catches all the way down into the primary amount of money, okay? We're still kind of peppered in on top. That's how we gain exposure to these upsides, okay? With the understanding, okay, that we have the double down available. We have the double down available below these levels, okay? That's just crucial. We have that available below this level to where when we look at it, really, this is a microcosm, and as we bleed this into the overall larger scenario here, and if it will let me do this, yes, it will. Okay, look how beautiful that is. Okay, right along the touch points of the Fibonacci. Magically perfect, right? It is perfect. Okay, they may want to be revisited again at some point in the future because they're so perfect. They're such a part of the pricing dynamic here. This is the level of precision that we deal with on this channel consistently. This price target, if and when it comes around to being on a retracement side of things, and we essentially stretch this over into here, and we have to ask these questions: where will this retrace to? I'll tell you, there will be 200 channels or 200 people talking about different things, and we'll be right here, bam. we'll give this and we'll talk about that for a week before it hits that. We'll talk about the level of investment, and we'll see people in the group make 30%. 3 or 4 days later, make another 30%. Okay, we'll see returns. Literally, if you get into this phase, this is the channel that you want to be around on, because we'll watch people double their money along a retracement phase. Okay, and I never wish a price to go down. If and when it does, I'll tell you, we see people double their money on our pricing targets. And it's because we know how to use this software. And yeah, some people were asking me about lessons. They have been for a while. We can maybe get into that if you guys are interested in lessons or something like that. I could maybe help some people out, I suppose. I have a great background, so that would be important for me to share my knowledge. I would be happy to do that at some level. So y'all can communicate with me in the Discord, etc., as to how that might work out. So, you guys, let's do a shout out real quickly to Twitter. Let's take a break from the pricing action. We'll get back to Doge in 1 second. Let's just do a quick feature here. Well, hey, look at all this. This is phenomenal. Look at all you beautiful people, huh? We have a shout out to Tiffany Griffin. That's great. Tiffany, give us a profile picture. We'd love to see you. Shout out to was it Janice Booth? Shout out to you. It's nice to have you. Welcome. We're going to shout out also to Daria. Look at that pup. Hey, Daria, you look like you're very professional. You look like you could give a speech at maybe an APAC seminar or something like that. Very professional. I like that. Kind of a political tone. Jose Roberto. Hey, Jose Roberto. Good to meet you, brother. Nice to have you here. Nice beach shot. Love that. Let's shout out. What's up, Chance Stedman? Hey, roaming the universe. We got a Voyager. Very nice, brother. That's a nice profile pic, brother. We like that. Looks like you're a traveling man. I have been around the world about 4 times, I think. So I took some time and did that. We have now, if I can pronounce this, Mehabajammies. All right. It looks like Mahabajani's not sure. Darren, shout out to you, Darren. If you could put a profile picture, it would help us introduce you to the entirety of the crowd here. We would really like that. Chad Kingsley. Man, Chad Kingsley, how's it going, brother? That is phenomenal. I used to have a big house on a street called Kingsley, and I missed that house. That's a nice kind of motorcycle shot there. Very nice. Chad, welcome to the group. You guys meet all these people and look out for them. This is Harsh Tripathi. Hey, programmer, we got a sophisticated, smart guy with computers who can probably help us. That's fantastic. We have a Waffle.1. That's nice. Hello there. Cryptics, work on you for you. Nice to meet you. Welcome to the crew. Slugum Crypto, Validator Ops Management. Whoa, I like that. We have a validator and an ops management, like operations. Very nice. Welcome. Hit them in the wallet. We like that. Very nice. Looks like you're doing some real work there. Thanks for the follow. And then we have one more guy here, the Sherman D. What's up, Sherman D? Welcome to the crew. You guys look like a very sophisticated group of people that are interested in trading and in a dynamic that will allow you guys to benefit and profit the most from that. Looks like we may have picked up. David, looks like maybe you put together something quickly there on the blackout routine. No problem. No problem. You guys will see we have the... I'll bring this up just because it's fun and it's a real deal. London's Crypto Kingdom giveaway. I'm London. This is the Crypto Kingdom. So we have 2,000 Harmony 1. Okay, that's going to be given away. I want you guys to all learn the story of Harmony 1 and almost the story of Dogecoin now because we're in the same boat. We focus on Harmony 1 a lot because of the pricing action. Tonight we focused a little bit on Dogecoin as well because it's turning into a historical event. So maybe it's a good breach for us to get into both issues. But guys, we're planning on Harmony 1 to be worth $1. This is going to be 2,000 Harmony 1 given away on Saturday. Okay, so you can't afford to miss this. I promise you can't afford to miss it. And I know that because you can't afford to not be a part of the Discord. The server is boosted. It's a phenomenal group. It's kind of the backdoor trading channels. All the knowledge is passed around, and it's a really nice group. You don't have to, it's not for charge or anything like that. It's just, come be a part of what's going on. 2,000 Harmony 1 coins, enter now. What you do is you like or retweet this, then you follow the kingdom, okay, and subscribe to the YouTube. And then all you have to do is sign up at the Discord, go into the Discord. And you go into the Discord, and it's real easy. So look at our tweets, and you'll find that. And a big shout out to Yoski, who's one of our moderators. Yoski is the man. So is BT News Trend. Promote these two guys. They're phenomenal. They help run the Discord, and guys, they are smart cookies. If you guys want to learn from people, they are just brilliant guys, real brilliant guys. A few more guys. Rafael Brea, what's up, Rafael? Brother, how are you? Look at that. That is awesome, Rafael. Maybe, let's see. If you can dream it, you can do it. I love that. If you can dream it, you can do it. That looks like a really radical kind of show there. In terms of this show, this is what we do on the daily. We are down to the technicals. I have drawn out today some real, heavy indicators on Harmony One. Guys, we run this program in terms of the trading view as hard as anybody else does. We're interested in people who want to learn how to trade. Sometimes we stream for 3-4 hours. We get into that because I know not all of you have the time to watch an entire, just to plug in whenever we're on. I'll say that. So I leave that open for people to come in and out of the room. If you guys could give I would really appreciate it. You guys have already met, and normally if you give me 100 thumbs up, I'm happy with that, to tell you the truth. You guys have already done that, so you have met your quota by far. 100 of you guys saying that you like something, that's more than enough for me. So thank you guys for being here. The one thing I want to bring up real quickly, and guys, this is for those of you who are here right now. I deal with, and I owned a hedge fund in the past, a private hedge fund. Now the circumstance is, I was looking today at any potential divergence or correlation between Harmony One and Dogecoin. What I was trying to do was to predict see whether or not there was a negative correlation. That's an inverse relationship. That is, if Dogecoin is going up, Harmony One is going down, right? I'm trying to find the trigger on Dogecoin so that people can say, well, it looks like this is kind of the inverse relationship we're looking for. And what I do know, to start with, it's a good start because Dogecoin has been in a pattern all day, essentially, of going to the upside, right? Well, we have a reverse pattern. Just fortunately, we have a reverse pattern that Harmony One has been in. So from a hedge perspective, and again, I used to own a hedge fund, so I'm always looking for an inverse relationship. One goes up, one goes down. Now the question is, can I find the exact details? And this is crucial, guys. This is the type of work that we do here. This is the type of analytics that we do, and it's just my background coming into play. It's what I love to do. But the types of questions we focus on is, okay, we know today specifically was an interesting day because Harmony One was down, okay? And guys, we love Harmony One. The investment team, look up the details. You all love it too. Don't worry about it. We love the price action on Dogecoin. Congratulations. We're never going to say we don't like something double or tripling in value. We love that. So amidst this downward pricing pressure that we experience here in Harmony One, all right, we want to look at the specifics to find out one thing. Well, we'd kind of like to know, and along this time, right, that we experienced today and things were going down, I'd like to look at this hiccup moment. I'd like to look at whether or not on this specific moment in the price action, can I contribute or can I attribute this specific portion to anything? Okay? This little trajectory up. Because things were going down for a while. I'd like to know on this specific trajectory what exactly happened at that moment with Dogecoin. Because Dogecoin was going through the roof this whole time. What happened right here? Because we hit something and we went up. We had a little spike. It was a little bit not normal. Then it looks like we've kind of continued and a little bit more quickly downward. So that's an interesting little moment right there. I want to apply that over and take a look at Dogecoin to see if I can figure out something which could be beneficial. And what could be beneficial is the fact that currently, and I'll draw a triangle for this reason, and it may be broken at any point in time. There's some aspects, I've gone through this in the previous videos as to why I don't like the triangle. I'll at least draw a trend line and a constriction. The constriction may be flat line on top. That's the one caveat here. We'll play with that. But if we're trading in sort of a triangulated channel here, it may give us some sort of a direction on Dogecoin. Okay, you saw that most of the market was red today. Look at the market here on the right. Most of it was red. So to me, I want to find an indicator, and this is a strategy. I want to find an indicator of one of these negative, let's say a negative concern, right? And I want to find, let's say, because we deal with Harmony One, we love it so much, the price action is phenomenal. I want to look at our Harmony One and find whether or not, and this is the trick, guys, as you look at something to hedge your investments, and a hedge will provide a risk diversification. If you trade into the same two instruments in terms of a risk exposure, That's not a diversification of your portfolio. Just so you guys know that. If they have the same risk profile, that's not a diversification of your portfolio at all. That's a multiplication of your risk. Okay? So we want to find something that moves in opposite directions. All right? When one thing moves up, the other moves down. All right? That is a diversification. That's an inverse correlation. That's what you call an inverse correlation. They move in opposite directions. And so as we see this kind of trailing off here, let's look at this real quickly. Because if I can find the hitch in, essentially the hitch in when Dogecoin is going up or down, you know, maybe we can find a strategy to get involved in Dogecoin. And I'll tell you, the interesting component of this, and please listen, would be the following. That as Harmony One would make a move slightly in one direction, if we can find kind of the litmus test, or we can find the little golden key here, whatever we can find, the, you know, what's the trick in this pricing pattern? Because the pricing pattern is all over the market. Okay, Dogecoin is going through the roof, and we have all these other examples to look through. I know by looking at Dogecoin and the fact that these are very, very fundamental moves on the Fibonacci. We deal with the Fibonacci every single day. We're married to the Fibonacci essentially in terms of our application of the technical analysis. Okay, so I'd like to see exactly, because they both perform very well on the Fibonacci. Okay, what is the relationship? Because I almost guarantee you, for a small move here, we're going to see an exponential move on Dogecoin due to the pricing action. So understand, it's not just pointing out the relationship. It's not just saying there's an inverse correlation. One moves up, one moves down. We see the other as a diversification in our portfolio. No, okay, it satisfies itself as a true diversification. Okay, one maximizes, one minimizes. You got to get into that in terms of what your risk management or your profile is trying to be at a specific time period. We don't want to get into that. Let's just deal with correlation. One goes up, one goes down. All right, that is a diversification in terms of risk. So, but the key is that as one does move, let's say on, and I say meaning one, as one does move, Harmony One, you're going to see in the other direction potentially an exponential move. So if we can highlight on one what is the key indicator, if we can come up with that key indicator, then we should have a key indicator as to the positioning of an exponential movement in the other asset. Okay, so Harmony One, if we find that indicator, right, we know, okay, this is the key, that's the turning point, and bam, we're going to turn on exponential returns in another investment. Do you see that? So it's not just that it's a hedge. That's great. A flat hedge is going to give you maybe a one-on-one return, okay, or one-on-one, let's say a relationship, okay, and I don't want to get into the details of this. It's hedge talk, it's risk allocation, but when we start talking about if we can predict something that is exponentially outperforming the rest of the market, essentially it operates as an option. Essentially, you're operating as an option, and you don't necessarily have the same exposure as if you were to be called up on margin. A lot of you guys know this kind of advanced talk. It's not simplistic kind of terminology. This is what we do. Honestly, on the channel, we get into discussions like this. And you're intelligent enough to understand that there is something going on positively and exponentially with Dogecoin compared to Harmony One, which is kind of in a trading channel. Let's go ahead and look at this if we can decipher this. This is the 15th. Let's see, that's today at 21:30. Let's get 1 second here. Let's look 21:30. 21:30. All right, let's pull this over and find 21:30. All right, now 21:30 was the peak. All right, 21:30 was the peak. 21:30 here was the bottom thus far. So maybe this relationship has broken down. That for the day was the bottom. This is significant, guys. Listen to this, because for the day, okay, that was the bottom. And I remember that was the bottom when I turned on this video, okay? That was the bottom here. And that is the equivalent of the top here. So there was some relationship up until that point. Has it fallen apart? Maybe so. I wrote some friends and I said, look at this right now, because the peak came towards the bottom of this relationship, of this pricing action. That shows me an inverse relationship, something I may want to try and correlate, right? Thereafter, this moves up. Thereafter, this begins to move down. Now, what we're dealing with here, from 2200 on down through the current time frame, let's go 2200. 2200. Where is the 2200? Down through the current time frame. It looks like we're losing on both right now. So I'm not sure that has held up. I will still continue to look at it because I believe there is some sort of a hook in line, and it may be this, guys. It may be that the hook was on the market. And understand, all of these investment concerns, I'm pointing to the whole entirety of the market as it was down, and a few were up, a few. But the broader indexes, the broader, if you want to call it the coin index or the crypto index, was shedding market capitalization to the more popular item, Dogecoin. Now, I'll tell you, one held up pretty well. Most of them held up pretty well. Most of them shed about 2% or 3% or 4% or 5%. Now you're getting into 5%, 3%. So these all of these, it looks like to a potential, this is accelerating into Dogecoin. So it's going to be interesting to see how things do hold up. We may be losing that dynamic because it was 2 to 3%, et cetera, up along the board. Now it looks like it's accelerated to potentially 5, 6, and 7% along the board. Okay? And I'll also say it looks like it's also accelerated into Bitcoin. Bitcoin had been in and around 63 for majority of the day. It's now down to 61,381. So we may be seeing kind of a leveling off of here, and we'll want to see the impact that Dogecoin has on the overall market. We'll also want to see if we can predict it. Okay, we'll need to know if we can predict it based upon any of the charts of these other concerns. I will find a way to match up, and I will probably start with something along these lines so that you guys understand kind of the type of work that we do. And I say just the work that I do. How about the we meaning the market participants. Let's look at, let's roll over and put USD. Let's go ahead and just do this. Let's give up and do this. We'll give up and just throw this on top of here. All right. Now, what does that look like to you guys? That looks like an inverse relationship. Okay? So as I'm pulling over the top here, and I'll say it's an inverse relationship to the extent it looks like, yes, there has been kind of a falling apart of it. There may be a lead in now as I see this inverse relationship. Typically, you can tell an inverse relationship because it will start to look like a snake skin. All right? It'll start to look like something like this, and as you get towards it, typically you want the jaws to be on top and be on bottom, a circumstance where the mouth is closing. As you scroll across to the left, you want those, kind of the jaws to shut on it as you do something like that. This is advanced stuff, but what we're trying to do now is I want to define, or I want to determine, where is the correlation? Because I see this crossover right here, okay? I see this midline kind of crossover, and I want to know, okay, where can I find a correlative event in terms of, being able to, in the future, structure out a predictive on the kind of the exponential item. I'll just say that. And as we would want to potentially protect ourselves on our investments, I'll tell you, we are already involved. Okay, and I told you guys I did not want to draw this triangle. I've been saying that for days. I went ahead and drew it to see if we had some sort of a confluence. Every time, you guys who have been watching the show are probably laughing because it's been 10 times as I wanted to take it off. We may have a flat line resistance here. So you understand the actual technology, okay, that we employ and the actual strategy that we employ. Please understand that right now we are fine. We are not worried at all about Harmony One. We have pricing targets, okay, on Harmony One right now. If things were to fall down, we're excited. We have a pricing target here, okay, that has already been met for 30%. So while everyone's trying to clamor and make 80%, and hey, that if you can make 80% in a day, that's phenomenal. That's a lot of fun. We're happy to be a part of that the way that we can. All right. Well, let me turn that down just a moment. So we already have the pricing target set up out side of the action here, and we're ready to jump in. Okay, I know that for a fact. So we're not overcommitted in this zone. We already have the, let me pull down this Fibonacci, in terms of the amount of work that you guys see that we do, and it might be fun to do this on another concern. I hate to say this, but with some additional volatility on something like Dogecoin or anything else, yeah, if you have some volatility, we can work with that. If something's stuck in a trading pattern for 3 months or 4 months, it's not going to be very much fun for us to try and get a pricing target if the price is the same for 4 months. So that's one reason we like Harmony One quite a bit, and we love the community. It's a great community. You guys, you'll love it. It's a very professional crowd. The technology is phenomenal. You guys will like it. There's a lot of stories out there, though. You might just like the technical analysis and the strategies. So if we fall below this at all, okay, I'll tell you, we have at this 13 level, 13 cents. We already hit that perfectly. I provided that exact figure to everybody. Literally, it's just a calculation of the Fibonacci's. Bam! It was 30 to 50% in one day. Okay, then another hit we got right here. I provided this exact figure to people. Bam! 20%. 70%, it was 70% within a 5-day period. Okay, within the previous 12 days on our pricing targets, it hit in excess of that. But you're looking at 70%, and that's no easy deal, guys. Coming up with the exact pricing targets, and I'll tell you, as sure as we've been talking this whole time, I'll just promise you, and you guys will know, those were our pricing targets. You don't have to go back and watch all the videos. But that's the level of precision. A lot of people talk about we have a triangle shape, we have a bull pennant, we have whatever they want to throw in terms of nomenclature on the different pricing shapes or whatever they're coming up with in terms of the technical analysis approach that they use. We follow John J. Murphy. If you guys want to book John J. Murphy Principles of Technical Analysis of the Commodities or Trading Market or Futures Market, I think Futures Market. He's got a few books. John J. Murphy, check it out. And so we're prepared at these lower levels. If it gets down to here again, bam, we're ready for it. So I would suggest people who become involved in anything else like Dogecoin, which is a runaway train right now, which is a phenomenal story. I would suggest that you guys keep that same rationale and that you be prepared to always double down at lower levels, that you anticipate some degree of a retracement at some point. Okay, you need to anticipate a level of retracement at some point. And I will spend some additional time tonight and we will come up with a good hedge. Okay, so if you guys are interested in coming back to the channel, make sure you do, and make sure you turn on the notifications, because I will not rest until I find a good hedge. And what that's going to be is an instrument which tells me exactly when I can count on this positive price action for Dogecoin. And now it may have to do, again, it may have to do with Harmony One. And we have our hedge with Harmony One. That's tucked in the back pocket. I haven't talked about that for a while. We have a hedge with Harmony One, and it should hopefully kick in here soon. I'm going to say that. It'll be interesting as Bitcoin gets in and around to 60. That's all I'll say. It'll be interesting as it gets in and around to 60. So as you guys acquire into Dogecoin, for all of you, this fear of missed opportunities, understand that if you understand your investments, first of all, you'll be or if you, let's say, believe in your investments long term, that'll make the ride a lot easier whatever you get involved in. Don't ever achieve a level of overexposure. Always be prepared to acquire more at lower levels. Okay, so you never go in heavily at the top. You always pepper in, and you always look at a retracement, because that just gives you kind of a standard to look at to say at higher levels, nothing at the extreme high level. Right? Just draw your Fibonacci, put it on there. Put together your program trades, put your bids together, put your limit orders. I'll call them limit orders. Put those together at the different levels on your Fibonacci's. What does that do? It allows you to put together, and I'll cover this one more time. It allows you to put together, okay, some sort of a rationale where if you're doubling down at this next level of whatever you had there, okay, if you're doubling down whatever you had total there, if it's 100, then 200. Let's say doubling that whole amount is 600. Add all that up, double that, say 1,800. And let's say 5,400. Double everything on the upper levels. Why is that important? Because then you establish a reasonable demand curve. You establish your market. You're behaving, or you're conducting yourself with some discipline in line with market principles. All right, it's very simple. It's very simple. And you guys understand that at a lower price, you're going to have more demand. At a higher price, you're not going to have as much demand. So that ensures that you're conforming with the market, and it gives you a level of discipline. But again, you're always ready. We're always ready to double down at the more severe kind of retracement levels. So if the run continues with Dogecoin, that'd be phenomenal. I hope it does for all you people who are involved heavily. And if you're involved heavily, there's probably a whole nother talk that we could have in terms of you guys having diamond hands or whatever you choose to, however you choose to express your solidarity with this price action. I will encourage you to stay humble and don't let the money get to you, because you can have the jets, you can have the cars, you can have the Rolls Royce, and you can have a good time, and you can also have a real bad time. So stay humble and always invest. I tell you guys, always invest in the things that you felt that were worthy of investing, like your relationships and things like that, before you started trading and before you developed any kind of massive amounts of income or wealth that'll keep you grounded. So as we look at the chart just real quickly on Harmony 1, we are in a consolidation pattern. We were happy to have met this price target head on, and literally that's what we do here at the channel. This was a great news event. Guys, if you have not checked out Swift, SWFT, I'm going to tell you, Swift blockchain, that is the go-to alternative to your Uniswap or whatever else you're trading on. Check out Swift. We just got a new deal. Harmony One got a deal with, okay, we're on now with Swift. That's SWFT, Swift blockchain. You will love it. If you look at that, it's a dynamic thing to look at. So enjoy that. And that's about it. That's in terms of the overall talk this evening. I can kind of let things go. We have our pricing targets laid out here in terms of the projection of Dogecoin. What I'll say, the next level up, if this wants to cruise on up, I wouldn't be surprised if it cruises on up. Let's go ahead and say this thing wants to cruise on up. Let's say it wants to cruise up about the same that it did. If it wants to add on just what it did, it's not too complicated. Okay, 36 cents. That's no big deal. It can definitely do that. It seems like the guys in the community have earned that. I'll say they have been very patient. They have been very, very steadfast and resolved in achieving that 36 cents. So, and the good thing about it, guys, if it was up 100%, realize you guys want to get that to $1. It's a good framework for us to look at from Harmony One. We want to get Harmony One to $1. Both were hot enough. We both got shut down by the exchanges. We got shut down by Binance. You guys got shut down by Robinhood, as I recall that. So that's exciting. And let's see, anything else? I guess just the fact that, just do recall, you had a great day today with Dogecoin. As we think about the multiplicity factor of money, as we think about returns, let's talk about compounding nature of returns. If you're at 25 cents, guys, if you double it tomorrow, you're at 50 cents. If you double it one more time, you'd be at $1. So that's not difficult. You can you can achieve that dollar. Just maybe plan out what you're going to do with that dollar, and if that's what suits you in the long run. You may have another investment you start thinking of, but just stay humble. You'll enjoy yourself. You'll enjoy your life more. You'll be able to help people, because I think that's the do only good every day. Harmony is the Harmony crew, so I don't see how the two groups couldn't rationally get together. We've covered kind of the pricing targets. We've covered kind of the instant action here. In terms of this ongoing channel, I think it's a good thing for us to necessarily talk about, because this is the hallmark channel for Harmony One. We go through a lot of detail, guys, on pricing action, on investments, on different strategies, and we use the best strategies that are available, the biggest guys on the street. Okay, this is not a show and glow kind of channel. It's not something to get wound up about, and you won't see a lot of screaming and kind of events like that. You'll hear a lot of professional decorum on this channel, and it's because we care about our members, our subscribers. Do also, let's see, pay attention to, we said this again, but on Twitter, guys, we do have a giveaway for 2,000, and it's pretty good. I mean, it's pretty cool. It's 2,000 Harmony One, okay? And you guys did find that. That's good. We have a giveaway for 2,000. This is London's Crypto Kingdom giveaway. Look at this. All you have to do is retweet, say hello, retweet, subscribe here to the channel, and then sign up to the Discord. We have the Crypto Kingdom Discord. And on Twitter, I'll just put this again. If you type in the Kingdom in the search box, you'll have to scroll down and put Go to the Kingdom, all right? Go to the kingdom, click on go to the kingdom, and what happens? You'll have to scroll down and click that search box at the bottom. Then you pull up the crypto kingdom. That's us, real simple. I've got a finance background. I think here it says former finance professional and presidential advisor. It should be former presidential advisor. I'll go ahead and say that too. Remind me to change that, somebody, tomorrow in Discord. But yeah, that's just the truth. That's my background, and it's a pleasure for me to be able to share that with you. So I do need to update that one portion. But it looks like we've got a lot of people applying for that. Applying. It sounds like a job. You're applying for the Harmony One giveaway. No, you are interested in that, so you guys are taking care of those entries. That's fantastic. We got some more people. Let's give some shout outs to Twitter. Let's go ahead to Martin. Martin, what's up, brother? Welcome to the Crypto Kingdom. I love that beach shot, brother. That looks like a fun training. Looks like we have a beautiful, beautiful woman. Kobe Frenda. Hello, Kobe Frenda. You look like a beautiful woman there. That's nice to have a beautiful woman. We are welcoming of beautiful women. We have Jack Saran as well. Welcome, Jack. Nice to have you here. And looks like I've got most of these covered. We do have, that's a great group today, guys. And just make sure that you do subscribe with notifications because we push out pricing targets. The Discord has kind of back channels. If you need to ask me specific questions, okay, specific questions about technical analysis or any specific one, kind of issue you're dealing with, there's a section in the Discord to ask and communicate with me or ask me a question, etc. So that's phenomenal. We can do that. And we do that every day. So, and you guys who are new to the Twitter that just signed up here, more shout outs. But let me tell you, put that, go ahead and put that, what is that? Put that profile picture. We want to see that profile picture, please. That is important for us. It looks like Kash. Well, hello, Kash. It looks like I am Prince Kash. Well, that's wild, Prince Kash. You have 339,000 followers. That is good. Cash, very important, Prince Cash. I haven't met you yet, but it's nice to have you here. Carlos Munoz, Captain Caribe, nice to have you here. Savas, nice to have you here. If you guys could go ahead and put something on your profile picture so we get to kind of know who you are, we would really appreciate that. And yeah, you guys are just streaming into the Twitter. That's fantastic. That's phenomenal. And it looks like you're fans of Harmony One, and a lot of you are fans of Dogecoin. We share the fact. Isn't this great? Our common history is that both of the upside potentials have been interrupted by major exchanges. One by Binance when they put the brakes on Harmony One, and Dogecoin by Robinhood when they put the brakes on Dogecoin. So yeah, we share that wonderful piece of history. So we've each gotten through it, and I love the story that Dogecoin is kind of teaching to Harmony One right now. Dogecoin is kind of showing Harmony One, well, hey, guys, just kind of be patient and relax because, this can happen, and we know that can happen. We're waiting for that kind of event, but we continue to trade. I mean, we trade into it. We love the technicals. We love, kind of a strategy to our trading, and yeah, it's just phenomenal. So in terms of the Harmony One, we'll go over in the Discord some more figures. I just say this chart, and I have to say this, the chart is really shaping up well, and I hope if Dogecoin goes through some sort of retracement, I hope that it can maintain this well. Okay, I'll just say I hope it can maintain this well because, guys, we have been really working in this community, as you know. We've been working to schedule in our trades, to develop a strategy, and as you look at this, we're really starting to achieve something that looks, a lot of people thought may have been unachievable. I'll just state that because look at the pricing action and understand gravity will sink in as soon as you have positive pricing action with a huge amount of velocity. This is going to apply to you guys in Dogecoin. Expect a retracement. Okay, look at this fantastic, the fantastic nature of kind of the bullish sentiment that's being brought up here. We love it. A lot of people have worked very hard for it. We've structured and programmed trades up. This is looking good, like it wants to kind of erupt to the downside. There have been some big investments recently. Some very big investments. People putting a lot of money into Harmony One, believing about it. So, and I know a lot of you guys in Dogecoin have been holding for a while. So, given the specific nature of today's or tonight's specific stream, I do want to cut it short, but I do want to let you know we are welcoming you guys from Dogecoin or other coins that you may want to learn about investing. This is the channel for you guys. This is the channel to learn what's going on, and we'll continue to provide you professional input. And like I said, I specialized in college in really in finance. I was a financial analyst outside, immediately out of Duke. I graduated in 3 years and built $1 billion equity fund, and did that working on the other side, or kind of along with Harvard Foundation. So my numbers are good enough for Harvard. They have been for a while now, and I look forward to bringing you the information directly here on the channel. So this is the Crypto Kingdom. If you could slam the thumbs up, that would be awesome. Make sure you join us on Twitter, and a big shout out and a thank you to Yoski and to Gear Shifter, who's helping run our Discord, and for everybody else who's contributed to the community. We have opportunities to get involved and to support this great community. It's a bunch of people who like to trade, and we like specific price targets. We like price action, and we like staying professional. The Discord is only for people who want to remain professional and to have a good time, and that's just what we're into. So I appreciate you guys tuning in tonight.